So in this video today, we're going to be talking about Hertz rental car stock. It is a very popular stock that people are buying right now, and we're going to be talking about whether or not this stock is a buy, trading at around $2 per share. Now, for those who are not familiar, Hertz is a massive rental car company with over 10,000 locations in the US and international. And you see a lot of these Hertz rental locations at places like airports. So due to the global pandemic and the shutdown of travel, this severely hurt the business here for Hertz Rent-A-Car. And after being in business for 100 years, Hertz officially filed for bankruptcy in May of this year. Now, surprisingly, despite that fact, investors are flocking towards this stock, and in particular, it is those who are using some commission-free trading apps that make it very easy to invest in the stock market. Now, as of the bankruptcy filing, Hertz has around $19 billion in debts, and they have over 700,000 rental vehicles, most of which are sitting idle right now. But the thing is, the issues that Hertz was having are not just related to the pandemic. This is simply the icing on the cake for them because they have been struggling over the last couple of years due to competition from ride-sharing apps like Uber and Lyft. Rather than people renting a car for their business trip or vacation, a lot of people prefer to just use Lyft or Uber rather than having their own car, and it just saves them money or it's just more convenient for them. Hertz has been losing money year after year, and in 2019, they lost a total of $58 million. Now, the issue here, guys, is that if your business did not do well in 2019, which was overall a very prosperous year, people were traveling, business was good. If you lost almost $60 million in 2019, there's something very wrong with your business model. So then, when you enter 2020 and there's this global shutdown, it just amplifies whatever was wrong with the business currently. Now, usually when a company files for bankruptcy, the shares begin trading for pennies per share, maybe 25 to 50 cents per share, which is what we have seen with stocks like JCPenney, and in the past we saw this happen with Sears, which is currently trading for around 20 cents per share. The shares are basically worthless because what happens is after that company files for bankruptcy, if they do go under, which is very likely, all of the proceeds from selling assets are going to be used to pay off the bondholders and the debt investors, and equity investors would only get money if there's anything left over. But in most cases, the debts are larger than the assets, so the stock becomes utterly worthless. Now, in rare circumstances, a company can actually exit bankruptcy if they are able to restructure their debts and have some kind of outside investor come in, or if they were to merge with a different company. So, for example, back in 2011, American Airlines filed for bankruptcy, but they actually exited bankruptcy about 2 years later after merging with US Airways. So investors who bought American Airlines stock during that bankruptcy filing made out very well because the old shares of the bankrupt company were exchanged for new shares of this merged company with US Airways. But it's important to understand that's extremely rare, and in most circumstances, when a company declares bankruptcy, the shares eventually become completely worthless. And here's where things get very interesting with Hertz stock. And also, guys, if you're enjoying the video so far, please go ahead and drop a like for the YouTube algorithm. It helps this video to be shared with more people. Well, Hertz stock, after filing for bankruptcy, fell to a low of around 40 cents per share, which is typical of what you see when a stock does file for bankruptcy. However, what happened here is after the stock hit 40 cents per share, it went into a massive rally and climbed to a high close of $5.53 per share. And that is a percentage gain of 1,282%. So a lot of people were wondering, what the heck is going on? Why would shares of a bankrupt company climb over 1,000%? Is there something that I am missing? Now, before we get into why this happened, I have a quick message here from today's video sponsor, which actually was used for the research for this video, and that is Brew. I was really glad when they reached out and asked to sponsor a video on my channel, since this is a service that I already use. In the past, in the mornings, I used to spend my time doing the death scroll on my phone, going through random social media apps and wasting time, but eventually I decided to get a subscription to a couple of newspapers, and I also subscribed to Morning Brew about 1 year ago. So now, rather than wasting my time on social media, I read the news and I get my updates very quick and easy from the Morning Brew newsletter. Essentially, it's all the important news related to politics, stock market, things like that, in a quick, easy to read 5-minute email that's going to get you caught up on the things that you need to know with no additional fluff. And like I said, I actually got some of the information for this video from Morning Brew because they covered what was going on with Hertz stock related to the bankruptcy. This newsletter helps me to stay on top of trends, it helps me come up with good video ideas, and it also helps me with making my investment-related decisions. If you guys want to check it out, I highly recommend it. It's 100% free. The link is down below. All you have to do is subscribe, and you'll get those newsletters every single morning, Monday through Saturday. So click the link down below, guys, and subscribe to Morning Brew today. Alright, so why did shares of Bankrupt Hertz stock surge over 1,000%? The answer here is average retail investors stepped in and started buying this stock like crazy. Now, the reason behind this, nobody really knows for sure, but investors, in particular small ones, saw value in this bankrupt company. And it's crazy because this isn't the only bankrupt company that saw a massive rally in their share price after filing for bankruptcy. So essentially, you have these investors who may not know what it is that they are doing, they don't know what bankruptcy means, and they see a well-known company like Hertz trading for 40 cents a share or under $1 per share. They don't understand why that share price is so low, maybe they don't know what bankruptcy means, and they began flocking towards this stock. Then, as that price climbs higher and higher, other people see it going up, they FOMO into it because they think it's going to climb higher and they don't want to miss out, and that leads to a 1,000% rally in a bankrupt company. And the crazy thing is here, guys, this rally led to Hertz attempting to issue new shares of this bankrupt company, which would allow them to raise more money to pay off the debts that the company has. Now, the good news is the Securities and Exchange Commission blocked them from doing this. The reason is not clear here, but essentially it's because this is totally unethical and would essentially be a way to legally scam investors. So the SEC blocked this from happening. It's never really been heard of before of a company issuing more shares during bankruptcy. Now, like I said, one of the most popular apps where people are buying Hertz stock is the commission-free trading app Robinhood. Now, nothing against Robinhood here, guys. I use the app myself. But the issue here is that since it's commission-free trading, no minimum account balance, literally pretty much anyone can get in and start investing. And because the barriers to entry are so low, there's also not much educational requirement to get in there and start trading. So people saw Hertz stock and decided to buy it. And there's a site out there called RobinTrack, which tracks the activity on the commission-free trading app Robinhood. And what they saw is that 96,000 new users opened positions in Hertz stock the week that Hertz filed for bankruptcy. So the question becomes, is Hertz stock a buy right now? And just so you guys know, this is simply my opinion. This is not any kind of financial advice, and you should always do your own due diligence before buying or selling. The answer here, guys, is under no circumstances in any way, shape, or form would I ever personally consider investing in Hertz stock right now. I would never invest in a bankrupt company because odds are the shares are going to become worthless. They sell all the assets, they pay off all the debts, but most of the time, the debts are far larger than the assets, so the equity investors get nothing. Buying into shares of a bankrupt company is like even worse than gambling. I would rather go put my money on a blackjack table or play roulette rather than investing in a bankrupt company. I don't fully understand why people are buying Hertz stock. It may be a lack of information, or people just for some reason think this stock is coming back. but it doesn't look good. This was a flawed business model for the last couple of years, and the pandemic that shut down travel was the final nail in the coffin for a bad business that just doesn't work anymore in 2020. And even Hertz came out with a statement when they were looking to issue new shares, basically saying they're almost certain to become worthless. Hertz wrote that we expect common stockholders would not receive a recovery through any plan unless the holders of more senior claims and interests are paid in full. Essentially, it's almost a certain bet that shareholders would get nothing, even those who would have bought the new shares if they were allowed to issue them. I think the average retail investor doesn't understand what bankruptcy means, and unfortunately, while these free trading apps have done a lot of good, it has also allowed people to enter the market with no prior experience and no education, and they may just have no idea what bankruptcy means. They see a name like Hertz, they recognize it, they see that it's trading for $1 per share, and they want to buy shares having no idea what is going on behind the scenes. And the fact that Hertz tried to issue new shares seems like a very sketchy move to me because they pretty much knew those shares were almost certain to become worthless. And it's also worthwhile to mention that before stepping down last year, during the year when this company lost $58 million, the former CEO took a salary of $9 million, of which about $3 million was cash. Even though the company was losing tens of millions of dollars, that CEO also took a salary that year of almost $10 million. I just don't trust that. I would never, ever, ever invest in this company, and I would not recommend that anyone out there invests in bankrupt companies like Hertz. So anyways, guys, there you have it. Short answer, no, Hertz stock is not a buy at $2. It's not a buy at 50 cents. I would not touch this stock in any circumstances. Let me know what you guys think down in the comment section below. If anyone has this stock, if you bought it for some reason, I would love to hear why that is. Leave me a comment down below. Like I said, guys, if you want to check out that Morning Brew free newsletter, that's the top link in the description. Thanks so much for watching, and I will see you in the next video.